In this video, I'm going to break down exactly how I find key supply and demand levels for the week, a live trade using those levels, making over $3,000 on my alpha futures evaluations, how I use the VIX, and some good tips and tricks of how the VIX can save you a lot of money, and then some key tech stocks and metals overviews, levels that I'm watching for gold, Tesla, NVIDIA, and some other tech stocks. So let's break it down. If we hop into the 1 hour NASDAQ chart, and this is where I recommend looking every single week for key levels, you can find really good pivots of supply and demand, and it can help you avoid getting caught on the wrong side of a trade because you don't want to be caught longing into supply or trying to short directly into demand. And I find these levels by zooming out on this hourly time frame and noticing we've really been kind of trending sideways between 26,200 on the upper bound all the way down to 24,400 on the lower bound. Now, eventually, once we break out of this consolidating price action, we're probably going to get a huge move, whether it be to the upside or the downside. Anytime you see price kind of condense and stay within a range, you get a huge explosion to one way or the other. So definitely be careful. When that happens, it's going to be aggressive. That will be a great opportunity, but just be aware. We have the upper and lower bounds defined, so we'll mark that out right around 26,200, and we'll have another right around 24,400. From there, I'm looking to find key levels based off of the number of touch points price had in a specific area. If we look right in here, we can see we had a ton of touch points, a ton of rejections that eventually tried to turn support, that went back into rejection. So this right here, seeing that many touch points identifies that that is a key level. And it was the bottom range of a channel we were trading in all the way back to the high bound of 26,200. And then you can kind of see we're at this lower consolidation range. So it'll be interesting to see, do we sweep this and continue back up, or do we actually get a breakdown in this area? This is definitely something I'm going to be watching this week. If we zoom in a little bit further, you can start to see where the next levels of support and resistance would be. We had this previous level of support right in this area that turned into resistance, that tried to support again, but is now the higher range of this channel we're trading in. From there, if we look at the next support, we're going to see all the touch points right in this area. So all we did was look at last couple of weeks, the price action, the key levels in which price rejected from, and we were able to determine levels where price is likely to pivot from or to bounce from. As always, this is not financial advice, but this right here is exactly how I use those levels. If we zoom into the price action today, just off of those levels we just plotted, you can see how important they are. I caught a long here last night because we retested that previous area of resistance that was now support. Today we broke through it. We came up and retested that 24,750 area and continued down. And look at how those levels played out intraday. If you struggled trading today, you probably weren't aware of those higher time frame levels. And this right here is why it's been so hard trading this week, because look at all those wicks. Yes, we rejected from that supply level, but if you're not setting your targets, it's very easy to get chopped up in that area. But you can see sellers are very, very determined to hold price below this level. So I would not be surprised if we came down by the end of the day or the end of this week to this 24,420 area, which would be that next level of support. With that being said, let's jump into the live trade I had catching this rejection for over $3,000. So those 1 hour time frames that I plotted, I like to execute my trades on this 5-minute chart. You can see we have Tradeovate pulled up over here with my alpha futures evaluations. We started to reject that 24,770 level with a huge top wick, so I entered one contract short. Since this is is an evaluation account, I'm looking to use 1 to 2 minis. You can see my starter position is always 1 mini. And then if the trade is working in my favor, I'm looking to add to the position. Now, my initial entry, I always have a 20-point stop. And once the trade goes right around 15 points in the direction I'm looking for, I like to bring my stop below break even. Now, once my stop is break even, I look for a point in where I can add another contract to this trade. As long as momentum continues in the direction I'm looking for, this paired with the VIX starting to increase gives me the confidence that we're likely to break through these lows. And that's one tip that I've really started to implement in my trading, especially for these evaluations, is adding to winners. This reduces the chance of blowing up because I'm not starting with a huge position. I'm only adding to the position if the trade is going in the direction I'm looking for. And that was a mistake I used to make all the time, is I would see green and immediately get out of the trade, to where now I'm looking to see, okay, is the trade that I'm looking for actually playing out? If it is there a spot that I can add to the trade? You'll see right there, I added one more NASDAQ contract short, and then I'm trailing my stop all the way down to the profit target. Now, I was already up $3,000, so I was just looking for another right around $1,200 or $1,300 to hit my maximum profit for the day, which you'll see we do as we continue to get closer and closer to those lows, bringing my stop down just to make sure we don't bounce right beforehand, but we do get filled directly at my take profit. Now let's break down VIX. So if you're not familiar with VIX, it's the volatility index. And in general, if VIX is increasing, not only are you expecting to see bigger NASDAQ moves, but a lot of the times if VIX is heading up, NASDAQ and the ES are likely to head down. They have an inverse relationship. Now you can kind of see we're trending up on the VIX. Now, if VIX is above, I would say this 23 level, I would definitely size down. I'm only using minis on my evaluations. When I get these accounts funded, I'm going to be swapping over to micros to be able to scale in and manage my risk a little bit better. The VIX is a huge part of my strategy, and I'm looking at it each and every day. You can kind of see that we have this new level of kind of like supply on the VIX. So we're trying to hold right around 25. If we continue to hold 25 on VIX, I would expect us to definitely at least get to right around 28. And what that's going to look like is the market is going to start to sell off down to the bottom of the range where I was talking about, right around like that 24,400. Now, usually an elevated VIX has a lot more downside on the market, but it seems like the market is kind of prepping for a large move. This might be a lot of sellers positioning for a bigger downside move. The only way we'll know is actually waiting to see what happens with the price. So don't go into the day with a bias, but plot your key levels and watch and see what the price is actually telling you. If we hop into gold, we can also plot out some supply and demand. You can see we previous had this level of support right around that 5,060. This was a previous level of support that started to turn resistance. But once we broke back above it, we went all the way up to 5,400. So this is definitely the bigger channel that we're trading in, but we're starting to get some downside. We're likely to test that 5,060 area. And if we do break below it, we have targets all the way down to at least, I would say 4,800, with also another level down in that 4,660 area. If we look over at Tesla, we can see right around that 412.50 is a key level of resistance. We also have a pretty significant level at 408. And then to the downside, we have some support right around that 393 area. So these are some key levels that I'll be watching. Usually Tesla, with the way the price action trades, also affects NASDAQ pretty heavily, as the NASDAQ is made up a bunch of these tech stocks. Tesla has been pretty strong relative to the market. So we do have some key levels there that I'm going to be watching, with the lower bound being all the way down to 387. If we do get below 387, we have pretty much an immediate flush all the way down to like that 381 level, but Obviously, we will have to watch and monitor how Tesla trades over the next week, and if we do get some downside on the NASDAQ. If we jump into the NVIDIA chart, you can kind of see NVIDIA has been quite a bit stronger than most other tech stocks. We have this huge level, I would say right around 187. If we do get above 187, we are likely to head back to the upside, at least to that 192 area would be a good target. And then if we break back above that, we could start heading all the way back up toward 200. To the downside, we have some key levels of support right around this area, I would say, which is right around 177, 178. And then kind of like the last line in the sand, which is a double bottom, a very strong level right around that 170s. So that's what I'll be looking at on NVIDIA. NVIDIA has actually been really good with watching how that moves, kind of gives you an indication of NASDAQ. If NVIDIA is pumping, but NASDAQ is lagging behind, a lot of times NASDAQ will pump and follow the way NVIDIA is moving. So definitely keep an eye out for that. If we do get some downside, we definitely could test the bottom of that range. So let's head over to Amazon. You can see Amazon has actually been selling off quite a bit. I know there's been a lot of back and forth about Amazon with a lot of the war conflicts and some of their data centers and that kind of stuff. I'm not following it too much, but we have this key level right around, I would say 220. If we get back above 220, we could definitely head all the way up to 230 and then continue higher from there. So I would definitely be watching that 220 level and then right in that 230 level. On the downside for support, I'd be looking right around. Okay, so we have a level that we're trying to reject from. We have a previous double bottom that we did gap below and started to reject. So that is a key level. We could be forming a pretty big, I would say, bear flag on Amazon. You can kind of see we might be headed to the downside. This is not financial advice, but this definitely could be indicating that we're looking to go to the downside here on Amazon with a target at least at that 202 level. And if we do get some downside below that 202, we could see 198. So that's the levels that I'm looking at on Amazon. So as always, if you got anything from this video, if you have any questions, definitely drop them below in the comments. Make sure to like and subscribe if you want some more content like this. And I'm definitely curious on what kind of videos you guys would like to see. Do you want to see more of like the live trades, or do you want to see more of the breaking down of my strategy and what I'm looking for in regards to VIX and the futures? I'll also be doing some updates on alpha futures and other prop firms that I'm trading with, so definitely stay tuned for those.